closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. This is the second time we have been live today. Let's go right into the charts. Bada bing, bada boom. Here we go. So it looks like we're getting that bounce off the 0.5 of that upwards mean reversion path from this diagonal fib to the upside. So we got previously rejected underneath that diagonal fib level of the 0.5 and got bought back into a bullish hammer wick. So we did see that and measure that not too long ago to confirm that idea on the daily time frame. Now let's go into the lower time frame and start to see two candles ago, 1, 2, we were just below this right on the resting on the fib level, and we saw the liquidity get grabbed. What does it mean by the liquidity getting grabbed? Well, it means when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And then we get to see that using high block capital, which is a pretty penny per month, so you get to see that free of charge just by tuning in. So lucky you, just hit that like button to let us know you care. So here is the 1 minute time frame, which is 6 days of data. We're losing some to Father Time as we speak. The ones just above the range, which is 2852 region, which we did see a stacked region which is still open, lest we forget. And you will see this possibly get taken in the coming hours and days if we don't forget it to Father Time here. And we are starting to see that disappear into the abyss as we see this 9 billion imbalance turn to 2 billion without having moved thus far. So we did come back and grab this short liquidity in 50x and 100x pool. We did talk about that at 2732.
Fatality.
Yes, and they came back for that 100x without hesitation. Now you're starting to see some 100x open up here, which they came back to without hesitation as well. Down here, 107 million opened at 2731, which opened into the green candle. That's a big no-no, so they came right back to it and said thank you for that. And you still see some more being opened from this previous shoot up to the upside. Are we going to see a retrace down to 27k to grab the 50x before going higher, or have they made their intent clear to go up to these regions to clear these pools at 2775 and above? Let's go to the higher time frame once again to expand our vision to see what's going on the higher time frames. On the 7-day, we're seeing that imbalance to the upside as we talked about, and even though we got those lost to Father Time, they appear here in the 7-day chart, and you see that imbalance still clearly visible to the upside, 228.4 at 4 billion up there. But let's see how that stands on the higher time frame as we expand further into the monthly. Shout out to everyone here. Oof, stream is very choppy. Sorry to hear that. So let's take a look here. So we're going to see that there is a path and an imbalance up here at 30,300 at 60 billion now up here at 30,300, and the entire path caked up to 34k is also, if it gets to this range, is also a juicy target as well. You're getting 5 and 6 billion in the immediate region here, 6 billion at 27.8 on the monthly time frame, as opposed to what is below. Well, you're seeing just a few billion, not even, 1 billion at 27 even, and everything below clear. So are they going to start to head up to this to eat some of that short liquidity before intending to possibly come back into this? It looks like this might be the case. The imbalance is now to the upside on the monthly time frame. However, when we switch to the 3-month and the 6-month, here's where things start to get interesting, as you see the juiciness below of $150 billion down at 25.6, 4 and 2, and so it starts to taper, and by taper it still is a juicy 32 billion at 25 even. So are they going up to take out the shorts just to, is it a short-lived, pardon the pun, journey before they come down into this, is the other idea here. Now, you did have that previous wick that is here that could get recovered by creating your double bottom. We went over this idea of, if you go up, is this a short-lived thing before they possibly make another stab at the region that they've still left on the table, the 150 billion still open from the longs back here, the 41 days of long liquidity. That is the question on everyone's mind. Or is this a fake pump? It is False Move Monday, so this implies perhaps that a Tuesday, Wednesday reversal could be in order. Or are they intending to go higher with it for a little bit before they reverse it on Thursday? We will see. We will see. Let's go to the 6-month as we expand our vision. Hopefully it's not as choppy as it was before. Not receiving data. Let's see. What's that about? Strange. Anyway, so the 6-month time frame has the path 82 billion at 25.5, 68 billion at 25.2, and 48 billion at 29.4, and the entire journey caked in certain fashion all the way down to 100 billion at 22.5. So this imbalance possibly getting reclaimed here on the higher time frame of the 6 month, showing an imbalance starting to form that they are getting interested in coming back to, possibly on at 22.5. Now that doesn't mean the path to the upside is not without being ignored. Everything in the double digits above 30k. So if they are to gap up here, they would gap up with the fury to 30k to express their intent to gobble that in a similar fashion that they did here. They gapped through the liquidity here to go to their target up here. So if they were going to do in a similar way, they would gap up just the same. Now, why would they do that? Well, you have to expand to the yearly time frame to get that narrative structure to form. As you start to see the heat growing in 114 billion at 32.4, 103 billion 32.8, 116 billion at 33.2, which were previously not in this color of light green. They were aquamarine and darker, as now there is caked up liquidity up in this region to the 34.8 region. Could start to make this path clearer. 34 even has 82 billion and 33.6 has 78 billion. They're starting to cake up this region now after reclaiming previously some of this down here. So they took some of these 78, 54 and 95 billion off the table. They took 95 billion off the table at 25.6, so that frees up some bounce potential to the upside. Are they interested in going lower to grab the 83 billion at 25.2? It is less than the 25.6, so it makes sense that it tapers on this yearly time frame. However, at 24.8 you have 100 billion that is waiting to be reclaimed. So are they going to go down to grab this before they just spawn some divergence? Previously they had done something of this sort in March, and they grabbed a fair amount down to 19.6, and then that tapering from 19.6 to 19.2, they just decided to leave 19.2 alone and reverse from that point. So we have it starts to taper from 24.4. However, the bearish sentiment would basically be set in after 25.2 gets taken and closes beneath that. So 25.2 is the basic line in the sand that is being drawn here on all the time frames. Do they come back to 25.2? Let's go to the 3 month because it has a better picture of both sides of the liquidity. We'll leave it at that and then start to paint our picture as we go into the Binance chart. Shout out to everyone here. Hopefully it's not as jittery as you experienced in the beginning. Alright, so we got our fibs still in place, the bearish projection and the bullish projection. If we ever manage to reclaim that, we could probably remove this bullish projection because it did get negated, so we would be seeing a newer bullish projection coming to fruition. So we will delete that until we can see a retrace occur. Alright, so basically you need to negate these levels that we are at currently, which we are unable to do. So the 786 that we bounced up to, if we get rejected off that bearish lead, then we could come back down into these regions, which we have reclaimed down to here. All right, let's turn on our momentum indicators. This is momentummaster.info. Link in the description for more. Let's go to that. Scroll down to features and toggle at your, and you can toggle the different components as we go over them. So fashion here and thickness on the 12-hour time frame, which has yet to be staved, which is showing in the 12-hour fatigue that is starting to occur here the money flow coming up on the 12-hour, but having not gone that far above the adaptive, even the adaptive moving average rejection here, unless you can reclaim that. This could be a bearish retest to the downside on the 12-hour time frame. Now the 22 is also most likely making its journey to the upside as well. You still have 8 hours for this to close alongside the other 12-hour candle. So where does it want to close itself is the 22-hour play. The money flow starting to step back in here on the 22-hour time frame. The rising sun not so impressive just yet. You did get that crossover event to give you a little bit of upside momentum. We talked about the 22 and the 12 versus the 6-hour and the 4-hour, and that's what we're seeing happen now. So the 6-hour and the 4-hour are overbought, as you're seeing the 6-hour get pinned here, and we're getting the cloud resistance on the 6-hour time frame, as you like to do. When you do battle up against these 6-hour time frames, this curvature is what we were seeing, and it was kind of preempting this move to stab up to the curvature, the potential momentum shift of that. So when you battle up against this, this is how you shift the momentum of that cloud. If it does start to curve to the upside, you would need to see a piercing of that in such a way where you would pierce and come back and retest, and then see that continuation after you pierce the cloud. So you'd see this piercing and come back and continue if you were going to be bullish, and then you'd look for your kind of smooth entry off the cloud there. Okay, so here's where you're getting at that ambiguous point where it's risky 50-50 and not in your favor necessarily one way or the other. If you look at the 4-hour time frame cloud, this is what's already occurring. You're seeing this shift out of the cloud structure. That's curvature nature of the 4 is starting to thin. This is what you'd like to see on the 6-hour if this is a true path to the upside, and you'd see this kind of kiss occur on multiple frames. So are we going to get recharged off of this and make ourselves aware here? So are we going to fade on that 6-hour resistance and come back to kiss the cloud here on the 4-hour and reclaim the 4-hour here? So the 4-hour is making this double top scenario, and you're getting overbought on the Williams. You're at the end of your rope here on the 4 and the 6 by the looks of it, which leads us to the 1-hour time frame. 1-hour time frame getting the cross down event potential already locked into position, so you could see this play out a little bit in similar fashion here. 1 2 3 4 5 6 7 hours of downside perhaps before they start to reclaim or see some sort of crossover event. When you get this locked in, you do see some sort of reset of that time frame. So the baseline's closing beneath the price here on the hourly do suggest the hourly reset of some kind. What do I mean by that? Well, the stochastic is coming down on you. Williams is over in an overbought position, not yet getting the cross down alarm just yet, but you could get that at any moment. You already got the Williams cross down in preempt of this potential cross down on the on the baselines as well. So you could see this come down in this similar fashion here. And the liquidity coincides with that move with the opening of the longs to the shorts here. Whoops. Over here. So you got a pool down here at 27 even of 107 million in 50x longs that they could come back for without hesitation at 27 even. So if we go to 27 even, that would be about here at the ATR level. The cloud kiss on the hourly could imply that. So you break through the cloud, you come back and you kiss it. So this kiss on the hourly time frame could be your play for that potential boost. If you believe the boost is coming, then you could find something off of that cloud kiss perhaps. And this would also coincide most likely with the fib 618 bounce as well. So you can get that 618 at 27.39 and try to see if it'll take you to the upside. Once again, not financial advice. This is just paper trading fun, of course. So you're going to take a look at the adaptive here as you collapse into the 15-minute time frame, and you start to see what may occur. I'm about to head into the Nasdaq, so I'm just getting in the zone for this. You got to be quick on those time frames, so I'm trying to be quick in my analysis these days, not hesitating to think about it. There's no need to think so deeply. Just go with the flow and get out. So we're seeing this possible reclaiming of the adaptive moving average on the 15-minute time frame. Looks like we're getting rejected off of that. With that rejection, even though we got the cross up event here, it's fighting the hourly cross down, so this could be suppressed here and come down to the 618 region, which would also be the cloud on the 4-hour, as we've already illustrated. And this 618 confluence here off the 4-hour cloud would be a good little idea to take it. It would be outside the Keltner channel on this time frame. We look for that thing in about 30 minutes. You'll see the baton pass to London, and whatever they bring will bring some sort of fire to the upside or the downside. So you got about 30 minutes for a play to unfold, and then based off that liquidity grab, you could make your choice as to what you want to do. Alright, so that's why they call it the kill zone, and this free indicator will let you know when these times occur. It's the ICT kill zones by Tradinator. Go ahead and throw it on, and it will start to appear on the 15-minute and below time frame. So you'll see when New York starts to pass, when London closes and passes the baton to New York, something happens, and this happens normally in about 30 minutes or so. So you'll see this move play out either way. We're going to remove this one and go with this as a more feasible path. So this will make more sense. If you are going to the upside, you would go stop hunt longs before you go up, and then see this path occur. And you'd have to reclaim this 786 level on the trend base fib. Let's make sure this is going properly. Alright, yeah, the 786 on this bearish trend base fib level, you'd have to reclaim that at the bare minimum before you make this path into the liquidity for the BPR and above. And that also coincides with the adaptive you're currently at on the hourly time frame. So the hourly time frame adaptive, you're still above, which we're trying to reclaim here. If you reclaim this, then you can basically make that play to continue, but you're fighting that cross down event, which is why I'm saying it's more likely you come down to here before you go up, if you go up at that time. So we're getting that failure at the 786, the cross down event of the hourly, the fatigue potential, the alarm potential on the Williams, and the 4-hour and 6-hour pinning trying to reset you here. So it basically means we would come down, and how far do we come down before we find some sort of bounce potential? The cloud is kind of thick here on the hourly, so down at this region off the 618 could be the idea if you are so inclined. With the 4-hour and the 6-hour high though, and the 12-hour not giving you so much juice, this just could be a potential drop from that point. So are you going to take that or not is up to you. I'm not sold necessarily on the ideas just yet. So you're getting those 5 time frame fatigue alerts to your phone as well using Momentum Master. That is the dynamic alert system. You set one alert and forget it, and it will let you know on your phone when these things get overbought and by how much and what their values are. Quite fancy, to say the least. So we're starting to see this start to play out here as we see the rejection of the 15-minute cloud. We came up above it, stop hunted, and we are heading down into this region most likely based off the liquidity, based off of the momentum fatigue potential, and coming into some of these longs that opened up to the shorts. You got 64 million in shorts as opposed to the 107 in longs. Not that much disparity, but coming back to retrace into the 50 and 100x is the normal play before they come back into this, if that is the case. All right. Well, I think we did it justice. That's my story, and I'm sticking to it, folks. I'm going to go into the NASDAQ futures within the Momentum Master Discord, so I will bid you adieu at this point, and short but sweet. Hopefully you got some value out of it, and yeah, that's about it from me. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I'll catch you guys on the flip side. Peace.